Hey everybody, Brian Shannon here from alphatrends.net. Today is Friday, the 8th of August, 2014. Hope you had a good week in the markets. Let's take a look at the numbers here. S&P 500 with today's $2.21 gain. Did finish with the week with a gain here of 0.38%. NASDAQ was up a similar amount. And the Russell 2000 outperformed a little bit this week, whereas semiconductors were down 1%. And we did see some further strength in gold and treasuries too. So let's take a look at the trends here and make some sense of it all. The S&P 500, as you can see on this daily chart, we are still below that 50-day moving average. The 50-day moving average is maybe starting to flatten out a little bit, but this week it was the 100-day moving average that found buyers, that is. And right now, looking at a 30-minute time frame, you can see in here it was just today that we saw the higher high here for the week for the first time on this 30-minute time frame. So we got that bounce. It didn't occur right at the 100-day moving average, but again, those moving averages are there to give us an idea of where to start watching on a shorter term time frame. Now on a 10-minute time frame, you can see that that 5-day moving average had been declining all week. On Thursday, we found resistance there after a gap higher, and it sold off to new lows. Now today, we did see some strength, and for next week, I think what I'd really like to see would be a little bit of a pullback in this market to hold above 192. If it can hold above 192, then I think the market has the ability to be able to bounce higher here a little bit. It is likely, so what we need, in other words, we have the higher high, but we need a higher low as well. So we want to see a pullback, and then if it can break from there, then we have a higher high and a higher low above a rising flat to rising 5-day moving average. Right now, it's still suspicious to chase this strength, but for the day trade today, we remained above the volume weighted average price for almost the entire session, and the buyers had firm control for today. Just up ahead, though, we do, of course, have this prior area of 194 to 194.5 that was resistance. So, it seems as though the market is due for a bounce, perhaps up to 94, 94.5, or even up to that 50-day moving average where we had prior significant support broken. But the fact is, we still have mixed messages across multiple time frames, and you have to really look at this market on a stock-by-stock basis. A lot of people talk about underperformance or relative performance for one market versus the other, and the one we've been hearing about most is the Russell 2000. The Russell 2000, of course, has had a year where we're right now still down 2.6%, but we're outperforming on the monthly basis, we're outperforming on the weekly basis, but we underperformed the S&P 500 today. So we're going to have divergences and periods of outperformance and underperformance, but what we need to do is, if we're going to trade the Russell 2000, we have to trade it based on what the Russell 2000 is doing. Now, we've had this declining 5-day moving average in here, and we have a prior area of support just up ahead, basically from 112.5 up to even 113 and a quarter. This has been the band of prior support that is most likely to offer some resistance. We don't know if it's resistance. If you hear people say we have resistance at 113, they don't know what they're talking about. Nobody knows if there will be resistance there if we just blast right through it. That's certainly a possibility, and in order to succeed, we have to have an awareness of what the potential outcomes are, what's most likely, and then become flexible and have our stops in place. Risk management is always job number one, as I often say. But we've got right now a little bit of resistance being formed at 112.5. This prior little support from 2 weeks ago is finding resistance right now. Ideally, the best scenario for Monday would be a pullback down towards about 111.75 that holds above this rising 5-day moving average, and then a move above 112.5 I think would be a decent trade opportunity for potential move higher. We do have the resistance potential here up through about 113 or so I wouldn't make it a larger position. So when we have a trade setting up, we want to take advantage of it, but we have to look at what's our confidence. And when we look at the daily chart here on the Russell 2000, it's still a mess. It's in a downtrend. So our confidence for that swing trade would be low. We would want to see, again, maybe a pullback to 1175 and then a breakout. If we then broke past 1275, then our stop would probably go just below this level here. The most recent relevant higher low is the way I like to look at it. So it seems as though these markets have kind of neutralized here this week a little bit, that with the 5-day moving average flattening out in the S&P 500, and in the NASDAQ we're starting to flatten out in here as well. So we're turning intermediate term from negative to neutral within a primary uptrend on the weekly time frame. And the daily time frame, we're still in a primary uptrend, and people have been buying at this 50-day moving average. The thing is, you don't want to be the buyer at the 50-day moving average. We want to look at it for evidence that the buyers are in fact gaining control. Now, we just finally found that evidence here today because we have this 5-day moving average flattened out. However, the buyers are not in control yet. We have the potential for resistance where we found some earlier this week at about 95 to 95 and a quarter. This is the level that I think is going to be important early next week. If we can kind of rally up there, pull back, test the 5-day moving average, then break out, similar to what we were just talking about in the Russell, then I think the NASDAQ has the opportunity to get a decent little bounce off of this 50-day moving average, perhaps up to the 20-day moving average here at about 96, 96.10. Either way, it's looking like there's the possibility that this market is starting to build at least that sideways action. From here, we just simply don't know whether this is distribution before it breaks down again, and certainly a break below 94 would be very negative for this market. But with the primary trend still higher on the longer term time frame, we're going to say there are greater odds that this market can break beyond the resistance and continue to push up, perhaps towards 96.5, 96.10, where that 20-day moving average is. Again, it's lower confidence trade. It's not that we have all trends higher on all time frames. So again, our confidence is lower, and that just means lower share size. The semiconductors broke down through that 48.5 level we've been observing, and they have been unable to really form any substantive bounce in here. We're still, this market is still looking like we've got the declining 5-day moving average. It hasn't flattened out yet. I think in order to get it flattened out, you're going to have to see it trading back up to at least here, then maybe pull back, find support, then perhaps the semis could bounce a little bit further. But this market is not looking very good to me. It would be one of the lower priorities markets to look for such a bounce. The financials, we broke that 2250 last week. That was a big break because this prior support now has the potential to become resistance up in that area. And we've seen that the 2240 level, in fact, has been a little resistance this week. So 2240 to 2245 has been a little bit of resistance. Now, in this case, where we have this 30-minute time frame, you can even kind of maybe look at a 10-minute time frame of the last 12 days or so, and you can start to see what we often see form in here is this inverted head and shoulders pattern. Now, the neckline is really up at about 2240 to 2245. That's what has been the band of resistance. So same for these other markets. If we could see it rally up to that, pull back, and then break higher, perhaps we could continue to move up towards 2270. But again, the daily time frame says we've got this bigger potential for resistance over here. We've got a declining 10 and 20-day moving average coming down through a 50-day moving average. I would really personally just leave the financials alone. And the other thing is that we have the year-to-date volume-weighted average price just below us at about $22 a share. So I think that near term there's not a lot of opportunity available from the financials, so I would pretty much stay away from them. As I mentioned, gold had a decent week, and it continues to just kind of be in that longer-term bottoming process at the 61.8% retracement of this move from the 2008 lows to the 2011 highs, where it found support at the 61.8% retracement, and now we're just turning sideways. So if they didn't scare you out, they'll typically wear you out. I don't see an edge in this gold market, but it's turning more neutral on the longer term, and that's good if you're a gold aficionado. The dollar did continue to have some strength here this week, and then we also saw that bond prices were higher once again this week, and all of the people who've been calling all year, for higher yields, are getting just the opposite. We're seeing lower yields as these bonds continue to march higher. We are at a potential area of resistance that we're coming into, but the path of least resistance remains higher. So don't listen to the people that say that the Fed is going to do this or that. Listen to the bond market if you're interested in yield issues. Apple this week, we had stayed away from it after getting stopped out at 98.20 last week in Alpha Trends, and we've had a declining 5-day moving average, so we haven't been looking to purchase this again. Now, what we see in Apple is we have this rising 50-day moving average right where we are. Basically, we broke this little trend line this week. I wouldn't be too concerned about that, but we have pulled back. After people kind of thought it was a lock for 100 plus right here, we've pulled back and avoided some pain so far, and still we have a declining 5-day moving average. So I think that next week an important level ought to be 96. I wouldn't buy it if it gapped up to 96, but I'd rather kind of see it rally up, pull back, create a higher low above a 5-day moving average, have that 5-day moving average begin to rally, and then perhaps back above 96. This is a stock we talk about every single day at Alpha Trends, but that is a scenario I'm going to be watching for next week and updating subscribers when I do see that there might be the opportunity. Right now, it's just buying blindly into a 50-day moving average. To me, that makes no sense. Unless you have to buy 10 million shares because you work at a huge hedge fund, there's no advantage to being early. Just let it continue to bleed out in here and give us, let us know when the proper opportunity is to purchase. Facebook broke out to all-time highs after reporting earnings 2.5-3 weeks ago, and it's been pulling back, and it's beginning now to neutralize here. We can look at the volume-weighted average price since the event. So the event was, of course, the earnings, and we'll just take a volume-weighted average price and draw a line straight across. And you can see it's right about, it comes in, the volume-weighted average price, right there at about $74.04. Now, the high this week was $74 a share. So when we look at a 10-minute time frame, you see that the 5-day moving average is flattening out and beginning to turn higher. And I think for Facebook to be a buy and have the upward momentum at your back, it needs to clear 74. Above 74, we would have a higher high above a flat to rising 5-day moving average, and ideally we would run up, pull back, create a higher low at 73.50, and then break out. That way we could set our stop under 73.50. This is another one we're going to monitor next week and look for the potential that Facebook can continue back to the upside. Tesla had a great week. We spoke about that last week, saying it looked like it was headed for at least this 244 level, and the 244, if you recall, was this cup and handle that we had mentioned. And we did see an all-time closing high for Tesla. I believe it was an all-time closing high yesterday, and here is very close to it, within a few pennies. Anyways, it's had a very nice run here, obviously, since the earnings. We've seen it go from 221 to 256. So it rallied, what was that, 30 plus points in here, and now it's beginning to pull back a little bit. So I think that hold off on making new purchases in Tesla until it can kind of settle back down, perhaps near this 244 level, show that it's stabilized, and then look to be a buyer on further strength. Twitter also, this stock reported earnings a couple weeks ago. It gapped up big, and it's just been drifting back. Right now, it's at this prior little resistance level, and it's at the rising 10-day moving average. So that tells us we should be paying attention to the stock and looking for a potential entry point. Now, the year-to-date volume-weighted average price is right in here at about 43.12 as well. And if we take a look at the volume-weighted average price since the company came public, is at 45.66. So those are just levels to keep an eye on. Back to a 10-minute chart, what we'll do is look for the volume-weighted average price since the event. So since it gapped higher, the average participant who's long or short, the average price is about $45.19. So since the gap, the average person is down a couple dollars in here. We're also below a declining 5-day moving average. So this one is still going to need to prove itself in this area, and perhaps middle of next week it will be setting up for a purchase if it can show that it's stabilized. But there's no advantage to trying to pick the bottom and being involved in there. If you get a gap in either direction, if it's a gap higher, I consider it good luck. If it's bad, if it's it's down. I think that there was no advantage to be buying in the first place with a declining 5-day moving average. So for me, when in doubt, just stay out. Let it set up a little bit further and see how the market action dictates what you should be doing, not by listening to news headlines and that sort of thing. Microsoft, as we know, has been in a great uptrend here for the last 2 years. It's pulled back to that rising 50-day moving average, and there obviously were some buyers in there when it touched that level on Wednesday. It was also a prior level of resistance here. So Microsoft, when we look at a 30-minute time frame, you can see it had that big quick run up, turned sideways, broke a lower low below a declining 5-day moving average, and it was guilty till proven innocent in the intermediate term while that 5-day moving average was down. Now, when we look, we'll just drill down a little bit further, and what we're doing is basically looking at from this point forward with using, instead of 30-minute candles here, 10-minute candles here. Now we're seeing what? The 5-day moving average is flattening out and actually beginning to turn higher. So that is a good qualification that we should be watching it for a potential turn back up. Now, in order for the intermediate term to turn back up and have an official uptrend on the intermediate term time frame, we need a higher high above that rising 5-day moving average. So the high of this past week was about $43.45. That's not an exact number, so take a look for yourself where that is. But getting back above there would create the higher high. Our stop would then go, what's the most recent relevant higher low? So a definition of an uptrend is higher highs and higher lows. If we buy it as it makes the higher high, our stop would be below that lower low, because if it broke to a lower low, our definition of emerging trend on the intermediate term time frame would no longer be in existence. Our pattern of higher highs and higher lows will have been broken at that point. So we want to be looking to be a buyer potentially above about 43.45, 43.50 with a stop probably under here, and looking for the stock to continue to march higher. Now the one thing is that the volume weighted average price since this break here is about 44. So be aware that 44 has the potential to offer some resistance, as does about 44.40 if you're looking for an intermediate term trade. Maybe there's a good buck of upside in it, and it's worth keeping an eye on. I had mentioned OVTI this past week that the MBLY IPO might get people interested in this one. And if you look at the weekly time frame, it's still a great looking chart. We have this prior resistance acting as held as support on a pullback. On this daily time frame, we can see that we're holding up above the rising 10, 20, and 50-day moving average. If you're still involved in this for a longer term type of trade, I think you raise your stop from just under what I was talking, it was 21.95-ish. I think that your stop for a longer term trade could probably go at about $22.35. I would keep an eye on this one for next week for a move back above this week's high, which is 23.50. If it can do that, then I think we've got a very good chance of not only testing the high for the year, but in fact continuing to break through and make higher highs and higher lows on the weekly time frame. So do continue to keep an eye on that one. Ebola has gotten a lot of headlines these days, and TKMR has a trial drug that is going to get special consideration. The FDA confirmed that. And this stock had a monster move today. It gapped up, and as I told subscribers midday, this is a great day trading opportunity. It has the potential to continue to run. I think that this is the type of stock that could probably continue back up towards these highs. It's a risky biotech stock, and any news that comes in could send it back down. So if you do get involved, do so in a prudent way as far as money management goes and what percentage of your account you commit to it. It's obviously extended near term, but I think if you're a skilled and an aggressive day trader, then this will be a great stock to continue to watch, as will BioCris, BCRX, another one that is supposedly working on an anti-Ebola drug. And here we had this cup and handle on the daily time frame broken today. When we back it up to a weekly time frame, you see that today it also broke multi-year highs, and on the monthly time frame, that is a pretty significant break. That looks like, when you have something that has the public's fear and attention and something that maybe is going to cure something, this is a type of stock that could run to 20 just based on hype, whether their science is good or not. Now the stock gapped up today and then pulled back towards the end of the day. I don't like the fact it closed below the volume weighted average price for today, so I'm not holding any, but I I would say keep a close eye on this one next week as well. Every day we go through great ideas on alphatrends.net for subscribers. So if you haven't, take a free trial for 7 days and see what other people are taking advantage of.